Welcome to Drill Down Earnings. We have quarterly results out from Lumentum. Stock ticker is LITE, L-I-T-E. Kind of like beer, but Lumentum's different. I'm Cory Johnson. I'm also different. I'm the Chief Market Strategist for Epistrophy Capital Research. We look at the 50 most important companies in technology. And I pay a lot of attention to the optical sector, and that is the componentry and the systems that are moving data, both for telephony and increasingly for AI data centers. So this is a really fascinating company. I own some competitors' stocks. There's probably a bias here. It looks like I wish I owned this one because the market just loves the turnaround happening at San Jose-based Lumentum. This is 2026 Q1 numbers, really strong, $534 million in revenues and a $7 million profit. That's not much profit, but look, first, data centers are driving the revenue growth. They've seen 58% year-over-year revenue growth, which is really incredible. Now, as I mentioned, well over $500 million in the quarter here, approaching $600 million. And hey, they actually had a profit, a tiny profit, but an operating profit, 1% operating profit. This business lost almost $500 million in 2024. To see anything that sniffs at being profitable shows you the change here. It's not just growing the revenues, it's actually having something to show for it at the end of the day. To make my model and my day a mess, they changed the way that they give out the categories of their business, limiting them to components and the systems. So brand new categories. They gave us numbers going back over 5 this quarter and 4 before. So 5 quarters. Not enough to do a lot of year-over-year comparisons, so a little bit. Let's talk about what these things are. It gets to what Lumentum makes. So they make components which represent the building blocks of optical and laser subsystems that are sold to original equipment manufacturers who make these things, as well as network equipment makers. So laser chips, sub-assemblies, wavelength management devices, line subsystems, all the stuff that moves information along fiber optics and that lets other companies make this stuff. They also make some of the stuff as well. And so while 71% of their business was components in the most recent quarter, and that's driven by AI-related demand for lasers, essentially. Systems also, the finished standalone products, cloud transceivers, optical circuit switches, industrial lasers that are complete units. Those systems accounted for 29% of revenues in the quarter as they shift towards integrated high-speed optical products, again, serving the data center world here. The component business is growing. Sequential numbers showed us 18% year-over-year, sequential growth, which is really strong, kind of amazing. And indeed was up 64% on a year-over-year basis, driven by those EML lasers, line sub-assembly systems, and DCI assemblies for hyperscale and AI workloads in data centers and moving stuff around data centers and even potentially to other data centers. Components, in the quarter, it was down 4%, but overall, 47% year-over-year growth. That growth is accelerating on a year-over-year basis. And cloud transceiver sales were within that were flat as the company expanded their Thailand manufacturing capacity. There were interesting conversations in the conference call about capacity and picking the customers who are going to grow the most. So pump lasers, I mentioned pump lasers for subsea networks growing really well. Coherent components that essentially allows them to tune lasers for long distance communications. You're wondering right now, what the heck is a pump laser? Well, a pump laser sits in a long distance telecommunications line. They'll put in a pump laser to hit the existing lasers that might be sort of starting to slow down over time or lose their strength of their signal. Hit them with essentially optical amplifiers, so it energizes the lasers as they're starting to peter out over spaces and in terms of signal strength, so they can regenerate new energy and go further along without breaking the signal here. Well, it's really interesting stuff. It's really important as we go forward in a world where AI data is moving at the speed of light, indeed. And so the stock, while not accelerating at the speed of light, is really showing the success of this turnaround. It was up 23% after the numbers came out in a single day, and up 252% over the last year. It's been a fantastic stock. And one of the things they're managing now is they're managing their inventory well. While revenues are growing, they're actually finally able to grow inventory, but inventory is still at 145 days, not too bad, not the terrible nearly 200 days of inventory they had 2 years ago when things were not going well. Their yield is better, their throughput's better. They're talking about a 40% capacity increase, all under the guidance of their new CEO, not so new anymore, but Michael Hurlston, changing things over there. Here's what he had to say about the improvements on their execution within Lumentum?
Our improvement in execution is beginning to bear fruit. If you remember, we said that we've been really missing the front part of customer ramps due to some execution challenges. And that seems to have corrected off, where we now are participating in the very early part of customer ramps. We have an expectation to be shipping 1.6T transceivers sometime, middle-ish of next year. And those will be at the early part of the customer ramp as well. So for the first time, we're getting this layering effect where we're not seeing a dip in revenue as we sort of see one cycle ramp down and the next one ramp up. We're getting this layering effect that I talked to in the call. That's predominantly with our largest customer, but we are seeing revenue from the two customers that we've talked about previously as well. But pretty much the majority of all of this is coming from our largest customer.
And hey, it's worth noting that Lumentum, that largest customer, is probably Amazon Web Services. They never say. 2 years ago, I think it was about a quarter of their sales, but it is a very important customer to them. We know Web Services is growing. Just last quarter, growing revenues at a 20% pace, but spending tens of billions of dollars to grow out their data centers. Some of that money is going to end up in the pockets of Lumentum, which is one of the reasons we follow this company. But what's it all mean? What's your big drill down earnings takeaway? What's one number that tells you a whole lot that drill down earnings bite? I have all that. So your summaries at Lumentum reporting 2026 Q1 earnings, fiscal 2026, whatever your essential summary tells you. This company did $534 million in revenues in the quarter, with really nice gross margins, but operating margins, year-over-year growth, 58%. Really important because these guys make both the components and systems that are driving the growth in long-term, long-distance data communications and communications in short distances in data centers using optical componentry. It's why revenues grew at 58%, but maybe the most important number is indeed 1% operating profits, the only operating profits this company has seen in a very long time. The turnaround is happening at Lumentum. You can start to see it in the numbers. The new CEO, Michael Hurlston, is crushing it there in San Jose, selling components and systems for optical networking, and AI is driving the boat there. All right, thanks for checking out Drill Down Earnings. Check me out at X at Cory TV, and TikTok, Instagram, and YouTube, of course, on @DrillDownPod.